Welcome to Dalrymple Trading. My name is Nandis. We're here to look at the S&P 500 and WTI Crude Oil and Bitcoin, and of course gold as well for the 24th of November 2025. Apologies to my audience that I haven't been able to upload a video earlier last week. I've been having some issues with YouTube and the format in which I've been doing them, so I'm still trying to work through those challenges. So I do apologize to my audience and my loyal viewers that haven't had an update from me. So just diving straight into the S&P 500, guys, from a daily perspective, this is the chart that I have up. We can definitely see a downward move or correction would be the right word, similar to what we're seeing in February of this year. So in February, we saw the markets corrected for about a month or a little bit over a month, all the way down to around the 8th or 9th of April before we saw a strong rally to the upside. So looking at the markets today, what we're seeing is a strong downward pull on the daily chart. And one thing to keep in mind is at this time of the year, we're also up for the Christmas Santa Claus rally. So we may see at some point this market rally, but that's definitely not the case just yet. I'm just saying that it could potentially happen, right? Especially when a lot of analysts and people start to get negative on a market. We see the opposite of that happen. So that could happen. So I just want to keep that in the back of our minds. But looking at this from a daily perspective, which we'll jump into now, sorry, hourly perspective, we can see that the first leg down in this bearish correction happened on the 30th of October to the 7th of November. We sort of saw the first leg of that move. Then we saw the markets rally to the 13th of November, and then we saw the second leg down to the 19th of November. Then we saw it rally to the 21st of November, which is Friday, and then we saw a strong correction in the markets. Obviously end of trade on Friday, but obviously if you're trading ETFs or CFDs, then you would see this overnight action as well. So what we're seeing here is the markets have actually corrected significantly, and we're seeing a sort of move back to the upside in overnight trade. And then once this market opens, we may see this strength continue to go further up before we correct back down to the downside once again. One thing to keep in mind, guys, is if you're going to play short on this, make sure that your risk to reward is calculated correctly. Because if you get that wrong and you're on the wrong side of the trade, that can really hurt, especially for trades that are to the short or to the downside. Okay, so what I'm expecting here is markets to actually rally from here, further up a little bit, and then if the current pattern is to go by, the current sort of downturn, we'll see continuation to the downside with S&P 500. That's obviously a projection. If we do actually then somehow go and reach above these highs here, when we sort of navigate to that range, it's safe to say then that we're probably broken out of the sort of correction phase and moved to the bear phase, but bull phase, sorry. But at the moment, with all things the way that it is, it's fair to say that everything that's happening here is currently bearish and to the downside. Looking at WTI crude oil, let's jump into the daily chart here first. We can see that we have been on a downward continuation pattern with prices ever since earlier in the year, specifically June. Let's put to the downside. Um, Currently testing support at 55, which is a very strong support level. If we do break below 55, then we're then entering the pre-COVID era of trading, bringing us down to the level of 50 and below as well. So you can see that obviously during COVID we fell in prices significantly. I doubt we'll go there with crude oil, but definitely if we do break the 55 level, then there is support at 50, and then further down at 42 and 45 as well. So, but overall, looking very bearish for crude oil. Keep in mind though, guys, that if there is a geopolitical event that does happen, we may see crude oil prices rally, break past that 60 level and potentially up to the 70s as well. It can be quite volatile if there's a geopolitical event, especially involving Russia and whatnot. So that's something to keep in the back of your mind. And there is some stories that I have seen on the newspapers where Russia and the US are coming together to negotiate a possible peace plan that would obviously reduce the chances of tariffs on Russian oil, which will see further weakness in the market. So it's very possible that we actually retest those 55 levels. Currently, we're sitting at 58, so it is very possible that that could happen and potentially even go below 55 as well. Looking at gold, this is the one that's been quite strong in terms of the market. This is a daily chart, so we've seen that correction from late October, and then we sort of settled at the end of October at 3,900 level. Now we're just right on 4,000 level, trying to sort of find that middle ground. It's been stronger than all the other markets that we've looked at so far. We do have support at that moving average and support one standard deviation below that as well. So gold is faring a lot better, and like I've spoken in my previous forecast, there's a lot more upside potential for gold, given the fact that a lot of fund managers haven't put a whole lot of gold in their books. Talking about 401ks, superannuation funds, pension funds, those sort of asset allocators haven't bought a whole lot of gold historically. So once they've seen this price action of where we are today, it's very possible that they actually end up buying more gold into their portfolios over time. We should see a strong upward pull for gold. So as an investor, I do think that it's still not a bad investment, given the strength that this gold is showing compared to our next candidate, which is Bitcoin, who's fallen from all-time high of 126,000 roughly down to 86,000 level, which we're currently sitting at. So the support below that is at about 76 to 75,000. So this is a significant pullback when it comes to Bitcoin and other currencies by extension. Obviously, Bitcoin was really the charge in terms of the downward move. It is concerning, and for Bitcoin traders, it would have been a very painful couple of weeks watching this market gradually grind down down to the levels that it currently is in. Yeah, it's very feasible that we actually hit that 75,000 level and retest it and then bounce off it. But short term, I do think because this is so bearish at the moment, we should see a strong pull to the upside, at least to the moving average, and then whether it gets rejected or continues to push higher is yet to be seen. But we will see a reaction off that moving average. So I do think short term, we may see strong upward pressure on Bitcoin prices to at least rally to a point where it's not so bearish. And then once we sort of come to that moving average and the market realizes, hey, look, it's still weak, then we may push down to the 75 level retest, and then it depends what happens after that point, whether we go down lower. But we definitely have that $75,000 level as a doorstop with the Bitcoin. But for a little Bitcoin traders, yeah, it is a bit distressing to see the asset fall so much over a short period of time. But I guess that's the volatility when you are trading an instrument like Bitcoin. Volatility allows traders and investors to make money because the market does move, and when it does move, it can be quite radical in the way that Bitcoin has currently moved. Um, so just to sum up, my overall view is the S&P 500. I do believe we're in a period of a correction. It's too early to call it a bear market at this point. I would say it's a correction. If you're an investor, it may be time to step away from the market and let the market do its thing before you step back in and start buying into it. It will be a good time to make sure that you are balancing your books just to make sure you're not overexposed to one asset class, and making sure that your portfolio is managed in such a way that you are not exposed to any downside potential risks that can come off the back of this market. Overall, my view is that we may still see some upside to the S&P 500. I do think this is a correction, and like we haven't had any sort of decent pullback since April, right? We saw one back in October, which was very sharp and rapid, and then we sort of rallied, but we haven't seen a sustained correction in the S&P for quite some time. So it is healthy to get these corrections from time to time. It is yet too early to call it a bear market. Crude oil, it's still a bearish sentiment on this for now. Gold, we're chopping sideways with a bullish bias on this, medium to long term, and Bitcoin, short term, we're seeing may see a rally up before we sort of rotate back to the downside. Is the current outlook. So yeah, it's going to be an interesting week. Let's keep an eye out. Hopefully, I can push out some further videos for you guys based on my thoughts. I will also be shortly uploading a video with an interview with a fellow trader. So I'm really excited to upload that video for you guys. So keep an eye out for that as well. So happy trading and look forward to seeing you guys soon.